If you've been wondering, is long-term rental better than short-term rental or vice versa? This video is for you. In this video, I'm going to break down 14 of your questions on which one is better and why. So if you're ready, let's go. Hey guys, welcome back to Lifestyle Leads. I am Diem, and I am here to answer your questions about long-term and short-term rentals. Why am I qualified to answer these questions? Well, it's because I have experience in both long-term and short-term rentals, as well as midterm rentals. And that's a video for another day. So today we're just going to compare the long-term and the short-term. The reason why I wanted to do this video for you guys is because as my time in the rental market as a landlord, as a host, has gone by over the years since 2016 until now. I have had to evolve my rental portfolio between the different types of rentals that I offer, depending on their location and the market, and also regulations in different cities. And so today, hopefully, I'll be able to touch on some of those so that you can make the best decision for yourself. So let's look at question number one. What are the key financial differences between long-term and short-term rentals? Financially speaking, short-term rentals have a bigger upfront cost because you are going to be furnishing the space yourself, paying for the furniture, the cleanings, also the setup in terms of if you're going to leave gift baskets or instruction pamphlets or how-to guides, those things are more of an upfront cost. However, with the short-term rental, there is such a thing as short-term rental arbitrage. So you wouldn't have to buy the property yourself. You could rent it from someone, pay a deposit fee, then pay the monthly payments, and then just worry about furnishing it. Versus long-term rental, you definitely have to buy the home. That being said, I always recommend you buy the home if it's something that you could afford, because I'd love to see it for you as a long-term investment and for you to benefit from home market appreciation over time if that's possible. Number two, how does cash flow consistency compare between long-term tenants and short-term guests? So cash flow typically is going to be higher for short-term rentals. You're charging by the night. They could stay whatever minimum you want. So if it's just one night per person, or you can do a 2-night minimum, 5-night minimum, whatever you want. And so typically per stay, if you break it down by the night, short term is going to generate more income for you, and long term is going to be less income. So one example would be maybe a unit that rents 30 nights at $2,000 a month for long term, but in that period, maybe of the 30 nights, you're able to occupy it for 25 nights of the month as a short term rental, but then you're making, let's say, $100 a night, 25 nights, that's 2,500. So you want to account for the gap where they're not staying. Those vacancies is still having to be paid for by you, right? When you pay the mortgage or when you pay the rent. So in that month, maybe you're getting more cash flow on that end. Now, keep in mind that for the short-term rentals, you're going to have expenses like utilities, cleaning fees, replenishment items like toilet paper, paper towels, and then also replenishment items for things that wear and tear over time, like sheets, comforters, etc., broken dishes, etc. And so what you really want to look at to have an apples to apples comparison is what you're netting in your rent after you pay for those cost of operations expenses. And then you can see which one is actually better, long-term or short-term. Question number 3. What are the management and operational challenges unique to short-term rentals, and how do they differ from long-term rentals? So imagine if you are hiring a property manager. Generally for long-term rentals, you're paying maybe 8 to 10% as a management fee. Whereas in short-term rentals, if you were to hire a property manager, you're probably paying 20 to 30% in management fee. And the reason why I share that is you can imagine the workload difference. So in long-term rentals, the bulk of the work is going to be at the beginning when you place the tenant, screen the tenant, find them to begin with, and then get them used to the home. They'll probably have a bunch of questions at the very beginning, like how do I operate the AC? How do you change the air filter? But then after that, once they've been there for a while, pretty much they don't really need anything from you until something breaks or needs repair. Whereas for short-term guests, you're constantly in the new guest work mode, right? So even if you have manuals, method of entry, super clear text messages that help them understand how to work things when they get there, you will still have to field a lot of questions, even if they're common and let's say you're good enough to have templates respond. So for example, when people ask me, hey, do you have any recommendations for restaurants nearby? I already have a template for that. So I just click into there, respond that, and then hit send. But I still have to do that. And then when they, let's say they have a circuit breaker go off, I still have to go over there and turn it back on for them, as opposed to if someone lived there long term, I show them once and they know how to do that time and time again. So that's where that differs. Question number 4. How does the vacancy rate in short term rentals affect your bottom line compared to a long term lease? So we kind of touched on this a little bit earlier, but the main key factor is one, you do account for that. So you account for your total rents minus all of your operational cost, and that's your net rent. And you would compare that to what you're actually getting for long term. Now, keep in mind, some long term rentals may include water or sewer, depending on how you arrange it. For example, if you have a unit that has maybe a triplex, kind of, right? A unit has 3 units inside it, but it's on 1 meter for water. And so you, instead of separating that, maybe you just charge a little bit more per person in rent, and then you, as the landlord, pay for that bill. So you would still do rents minus utilities, whatever you're paying for. Sometimes garbage could be that. Whereas on the short term side, it's expected that you, as the landlord, pay for all of the utilities. So once you minus out all of that, you're going to see what the net is and you can compare the two. With long term tenants, within their lease period, if everything goes right, they are occupying that period of time 100%. So you're only going to face vacancy when you have a turnover. And hopefully, you'll be able to get enough notice from the tenant. You can post a coming soon ad for your long term rental, and then you can get another tenant in there really soon after they vacate. You do the cleaning, and then you do the walkthrough, and you finalize the paperwork, and then you sign. That would be ideal, a few weeks, but maybe even up to a month. Whereas the short-term tenant, within a given month, you're going to have potentially multiple opportunities of vacancies in between each booking. Now, for me, my two current short-term rentals generally only see maybe 1 to 3 nights gap in between bookings, and typically no more than 5 days of vacancy in a given month. Sometimes as busy as only 1 day vacancy in a given month. That being said, those 2 units are not single family homes. They're essentially a suite. So it's a bedroom and a bathroom that's attached to another rental. And so perhaps that type of rental, because of the lower price point, the frequency of single or duo travelers, they are not vacant very often, but they are vacant much more frequently than a long-term rental. Okay, question number 5. What legal and regulatory issues do short-term rentals face that long-term rentals typically avoid? So, long-term rentals typically have difficulty in terms of when a state or a city has ordinance that protect the tenant way more than they protect the landlord. For example, making eviction very difficult, limiting the security deposit amount that we're allowed to collect, or limiting the criterias that we're able to use in terms of background screening. So there have been places that will say it's not legal to turn away someone with a credit score that's lower than X number. And it's because maybe in their population, they do have a lot of lack of housing adequate for the people in that demographic. And so even though it's not a protected class like race, sex, religion, it is still preventing people who need housing to get adequate housing. And then the government steps in and says, hey, you can't use this as a criteria anymore, for example. So there are still regulations on the long-term rental side. However, on the short-term rental side, there could be even more. And what's interesting about that is that maybe a city starts out, if there isn't a large demand for short-term rental properties from property owners, they may not care and may not need to assess any new regulations. But then, as the demand or as the inventory for short term rental increases, they might then input new regulations to maybe protect the inventory available for long term rentals for their residents in that location. And so, with that, mine too in Santa Rosa, California, used to never have regulations. And then suddenly, what seemed to be overnight, they had a slew of new regulations that make it really hard. So, they differentiate between hosted permits for short term rentals, meaning you live on the property and you're also just renting another space while you live there onto the short term rental platforms. And then non hosted, when you don't live on that property, they had limited the number of permits they would issue for non hosted. They had new regulations. You had to submit plans of how the layout is, where they would park, show that there's quiet ordinances in place, et cetera, et cetera. So regulations are very real in both factors. And to me, the key thing is to know the rules when you're playing the game and just to do it right. But you might find that the rules are too restrictive and that it no longer serves a benefit for you. So I'm kind of in that boat right now with my two short term rentals in Santa Rosa. They are at properties that have already been issued the permit. And if I wanted to change the name on title, for example, let's say I want to move them to a different trust or move them to a differently named LLC, then I would have to reapply for the permit. It does not extend over even if it's the same ownership in those business entities. So I'm kind of wondering if I want to switch over. Another factor to that is, the management level. Do I still want to manage them to this degree, or do I just want to eat the cost of the reduction in cash flow, but the improvement in the work quality if I had long-term tenants in there instead? All right, moving on to number 6. How does property wear and tear differ between long-term renters and short-term renters? I have found that a lot of the wear and tear occurs in items like broken dishes, stained sheets, ripped towels, for example, that need to get replaced when it comes to short term rentals. Another one is you got to think they're carrying luggage in and out of the unit. And so my two units are quite small. You want to make sure that there's ample room for them to move their luggage around. We end up getting a lot of scuffs on our wall paint or closet doors or doors in general because they're just constantly moving things in and out as they pack and unpack. Whereas long-term rentals, you could have damage upon move out is typically where you would find that. And that could be pets chewing on baseboards or peeing on baseboards. It could just be neglect over time because it's not their property. They may not care for it as thoroughly. That could mean blinds that get broken and don't get replaced. But in both scenarios, you would have like a security deposit or in Airbnb or short term rentals, some kind of assurance that you could pursue to collect damages fees. And the difference, though, is in short term rentals, like a scuff on the wall isn't something I would collect damages for. Worn sheets, stained towels, unless it was a crazy amount of stuff, I really don't collect for damages for. It's just a part of doing business. And so I just replace that. All in all, I just don't feel like there's great damages in either setting. Now, I'll add a caveat to that. People who rent out single family homes to one big group may experience a lot more damage than me because the two short-term rental properties that I have are just suites. They are one queen bed, a bathroom, maybe like a little kitchenette set up, but nothing fancy. And the listing clearly depicts that this unit is attached to another rental, or maybe where I live, my home. So with that in mind, I think there's a mental piece to that. If people were looking to rent something that they didn't care about and that they could mess up, they probably would be looking for something more isolated where it's not shared walls with another rental. I have found that this strategy has really helped me reduce the maintenance costs, the, party aftermath costs of renting a single family home outright for short term. All right, number 7. What level of involvement is required for maintenance and guest turnover and customer service in short term rentals versus long term rentals. So, aside from the things I've already mentioned, there's the cleaning turnover, right? And it is not easy to find a cleaner who would do the cleaning for a short term rental when the job is so small. Another factor you want to consider is if it only takes about 20 to 30 minutes to clean the unit, but to wash and dry a load of laundry for the sheets and linens takes an hour to an hour and a half, there's going to be kind of an issue there about what you can charge the client for the cleaning fee versus what you need to pay the cleaner to wait around. So, one workaround for that is with short term rentals, you can send out bedding and sheets to a laundry service. So, near me, they have, there's a service that could do laundry pickup. They would go wash it and then bring it back folded. So, that would save your cleaner time. Or for cleaners, you can have them set the wash to a quick wash and then just do the drying afterwards. And if you just do sheets and towels and exclude the, let's say, duvet cover, and then just do swap duvet covers and then do that kind of like as a one off every once in a while, you might be able to save time. But managing cleaners for an Airbnb is probably one of the top challenges because it's hard to find cleaners who have availability for you when your need for the cleaning is inconsistent. It's not like every Thursday you're going to come clean. It's like, oh, well, sometimes I have a guest that's a 3-nighter or a 5-nighter or a 1-nighter. So that part is a little difficult. For turnovers for long-term rentals, I just want to restore it to the condition that it was when I first rented to that tenant upon their departure. So steam cleaning, carpets, deep cleaning the house, all services that I hire out if they don't turn it over with those services being completed. And the key factor here is to include it in the lease agreement that they will have professional services do these things, not that they would do it on their own. Or you would determine that they need to, if they do it on their own, the outcome would be exactly the same as if a professional did it. And if not, you would then be able to use some of their deposit to pay for those services to ensure that the new renters have a perfectly clean space to move into. Number 8. How does tax treatment for long-term rentals compare to short-term rentals? For example, passive income versus active business income. Super good question. So short-term rental, because of the amount of work that goes into it, is technically considered an active business income. It's like you going to drive for Uber or any other job that you would go do actively and in exchange get money that you earn for. Whereas a long-term rental is considered like an investment, like if you were to put money, let's say, into the stock market and or earn interest on your CDs. These are things that you put money into, purchasing the asset, and then having a return on investment without actively working in the business, with the exception of maybe tenant turnovers. And so I'm not going to go too far deep into this because I'm not a CPA and you'll want to consult your accountant for that information, but keeping that in mind that they can be taxed as different classes. Moving on, number 9, what are the implications for insurance coverage when you operate short-term rentals compared to a long-term rental? Well, there really shouldn't be any implications if you're insured properly. So I make sure that the policies that I use for my properties, if I host long-term rentals in there, then I would want to make sure that I have a landlord policy that covers for that. And if I have a short-term rental in there, I need to definitely make sure that the policy I have covers short-term rental. One particular caveat for me is that one of my buildings has long-term, mid-term, and short-term renters in one. So working with a insurance agent, I make sure that the policy is enough to cover the variable activities that occur there. And even more so, differently than that, is my own residence where I live on site and I need insurance for my own property, but also my midterm rental and my short-term rental. So those are all things that you want to make sure you're properly insured for. I would not go the route of being discreet or unclear with your insurance agent, because I would hate for you to find later that when a claim is to be filed that you are not covered for that type of rental activity. On to number 10. How does real estate market react differently to properties used for long-term rentals versus short-term rentals in terms of value appreciation and neighborhood impact? Surprisingly, as far as value goes, there's not a huge value. You continue to assess the value of a property, whether it is long-term rental or short-term rental, based on the comparables in the nearby areas of what has recently sold. If the units are 4 units or less in one building, right? So, single family homes of 1 to 4 units, that is how prices are calculated. Whereas buildings that are 5 units or more are considered commercial real estate, and that is actually based on your rents collected versus the expenses that you have. So, if we're looking at just single family homes up to 4 units, then it is not different. The value of the home is not different. Now, the value of the neighborhood or the area can change depending on what type of rentals it is. For example, in our area, there's over by the river in Monterey, there's going to be like a lot of homes that are for vacation renters only. And so that might have a small impact on its comparables when one unit goes for sale and is kind of being purchased more as like an investment. But overall, the calculations are similar. Okay, moving on to number 11. Can short-term rental regulations change unexpectedly, and how does this risk compare to the stability of long-term rental strategies? Heck yeah, it can change in the blink of an eye, and it happened to me, and it's so annoying. I actually support short-term rental regulations. I think it is important that we all as a community agree on kind of how we want to operate. I also don't want to see all of the homes in my neighborhood turn into rentals or party houses or things like that. So regulations, I think, should be a good thing to help the community. However, when they are abruptly changed, you as an investor may have gone into this investment property with a certain set of rules. And so you did your math calculations accordingly. And then suddenly, now it changes. You have more permit fees, you have restrictions on how you can operate. That could be pretty difficult. You actually might hear vacuuming in the background right now. That's my husband vacuuming our short-term rental unit downstairs. So sorry, it's live in action as we talk about short-term rentals, but I digress. Okay. So how can the regulations change? They can. And usually you'll see it coming because it requires voting for new regulations to come up. And so, our community had to vote on requiring permits, on requiring certain things to be done inside the home, accounting for parking, noise regulations, things like that. You'll see it coming, but it might not be enough time for you to react because maybe you purchased this property with the intention of renting it out short term. There were no regulations as such at that time. You make these investments, you do demolition, remodel, furnish, and then now suddenly your rental permit is a concern and you might not even be able to get one. And because of that reason, that is why I always use long-term rent numbers to determine if a property is a good investment or not. And what I mean by that is when I look at a property, I look at my down payment that I'm willing to part ways with. What is that monthly amount of mortgage between mortgage, interest, tax, and insurance? And then I look at what is the going market rate for rents in the area for that same type of property. Can that amount cover my mortgage payments and all of the things that I had just mentioned? If it can, it may be worth it to pursue, even if my intention is to use it as a long-term or mid-term rental so I can gain more cash flow. But if I had to change it to long-term tenants, then I'm able to do so, and the math will be just fine, which is exactly what happened in my Phoenix, Arizona property and my Portland, Oregon property. And both of those, luckily, one is cash flowing $600 as a long-term rental, one is cash flowing about $1,000 as a long-term rental. As opposed to when they were short-term rentals, I was cash flowing like $200 to $2,500 a month above and beyond those payments. So there you have it. Next question, number 12. How does tenant quality and screening differ between short-term and long-term rentals, and what impact does it have on the overall experience as a landlord? With short-term rentals, if you are using sites like Airbnb, VRBO, you should be able to see previous hosts reviews on the guests that are wanting to stay in your unit. And even on Airbnb, you can have a setting where you do not allow them to auto book unless they have been recommended by other hosts. And so with that, you can see the star rating. I also like to read in the description. So I care a little bit less when it's like short term rentals because they're only there for a night or a few nights. I read more when it's a midterm rental where they're staying there for 30 days or more. But you have those reviews at your disposal. For long term tenants, you're going to do screening, right? So you're going to put them through a background screening for criminal history, credit screening for credit ability to pay, and then personal and professional references. So you can call their personal references and professional references or previous landlords to see, would they hire your person again? Do they have good working relationships? Did they get their security deposit back in full? Did they leave the place in the condition it was found? Would that landlord rent to them again? If it's family and friends, have they lived in this area long? Like, you don't want them to come in and break their lease and move. And of course, within all of that, you have to be very mindful of protected classes and not ask questions that are discriminatory. Number 13. How do long-term rentals provide better work-life balance or time freedom for investors compared to the demands of short-term rental management? That is what I alluded to earlier, which is that I kind of see myself eventually moving my short-term rental properties into the format of a long term. Now, earlier I told you that these are suites. They're just a bedroom and a bathroom. So how could I have a long-term person in there if there's no kitchen essentially? Or washer dryer. So at the very least, one of those two units, I could probably get a permit to do a JADU, which is a junior accessory dwelling unit. And that property already has a ADU. And I should be able to add one for a JADU, which then just keeps the main part of the house as the original single family home. But in doing so, I could add a little kitchenette. I could add a stackable washer dryer for them, likely. And that would allow it to be a long term rental. I would collect less cash flow, but I would also have less expenses and I would have less management. That being said, the other rental suite that I have, which is just a bedroom and a bathroom, is too small to do that. So if I don't set it up that way, I might have to eliminate that space entirely, or I could do it as like a rent a studio, a podcast studio, turn it to that, and people can come and register on their own. And I can have a recurring cleaner come once a week because it's just dusting and vacuuming, which is part of my regular house cleaning, anyways. So maybe do like a pure rent space or something like that. But that is the work-life balance trade-off, is that you're going to get less income. However, I think that can be said about real estate as a whole. We currently have 8 rental units among 4 properties across 3 states. And one potential exit strategy down the road when we retire and when we don't even want to manage long term rentals at all is to perhaps liquidate that and transfer that money into index funds or into some kind of a investment portfolio that doesn't require active management. And the last question, number 14. Are there differences in rental seasons, and how do short term rentals handle seasonal fluctuation compared to long term rentals? In my rental units, I don't experience seasonality anymore. But for the house that was in Phoenix, Arizona, we had a lot of winter birds. So it was very popular during the fall and winter months. But come summer, where it was like 105, 110 degrees outside, even though the house had a pool, people did not want to vacation in Phoenix, Arizona in the summer. And so I do get that short-term rentals, depending on the location, could experience seasonality that affects their rental income. Long-term, you don't really face that, right? Because typically people are going to be there for a year. They will probably sign a 1-year lease. But what you do have to be mindful of is the timing of when it is difficult or easy to find a tenant. People like moving in the summer. Nobody likes moving in the winter when it's raining or snowing. So let's say for some reason I ended up with a vacancy in November, right? Because not only is it winter, but now it's going into holiday season and nobody wants to move during that time either. I might say, let's sign this new tenant up once I get them for a 6-month lease so that that expires in the spring or in the summer. And then at that point, if they chose to renew, we would renew for a year, or I would get another tenant that would be a year from there, so that you can time your vacancy or your turnover during a period of time where it's easier for everybody to make the move. Anyway, I hope you guys found that to be helpful in some way. And if you have more questions, don't hesitate to leave them down in the comments, because that's where I get these questions to answer from. And if you found it useful, it would really help if you subscribed and hit the like button. And I'll see you in the next video. Bye now.